Hey everybody, welcome back to KF Trades. This is a great example of how volatility affects the price of your options over a course of a few days. This is a trade I had on Google. Get out there and make some money. So this was a trade in Google that I had on this week. And I'm going to walk you through kind of what my thought process was. And this is probably the best example that I've had that explains how volatility affects the price of your options over a couple of days. So here on Tuesday, Google had a big drop because Snap reported earnings, concerns about ads, etc. So Google really had a big sell-off. And as it was heading down, I was kind of waiting to see if it was going to head towards this 1950 area for the next couple of days. So on this big move down on Google on Tuesday, as it worked its way back up and kind of to make a comeback, I was waiting to find an entry point. And we'll look at the 5-minute chart on the dailies. And right here, this was the big drawdown. I didn't get in right here. I was waiting to see how things were going to play out. Made a recovery, and this is the other reason, as I mentioned before, why I leave my moving averages in on stocks like Amazon, Google, a couple of them that I trade regularly. These resistance lines come into play for me every day. So we had a pullback right here, and on this bottom right here, I decided to buy some options. And I bought the 2200 call for the following week on 6/3. So I had a week and a half or so to wait for these to basically develop. And the way the market and everything was going, I thought I had a pretty good chance. So at the end of the day, I caught this pop and I had a nice little profit going. Then we open the next day, pulls down, and kind of trades down and sideways most of the day and just kind of eats up that option value. With that said, you can see on those days, here was Tuesday, the VIX had pulled back. Then Wednesday, we had the drawdown in the VIX. Now let's look at the price of the options. So right here's that point where I bought, right in this area. So I just put this line in here to kind of show about where I was at. Had that nice run. Could have got out of them right there on the day, but I had, like I said, a week and a half. Then it opened up on the following day and had a big drawdown, so now I'm down on it. And these swings are crazy. Moves back up, I'm up on it. Back down, I'm down on it. And it trades like that all day, and I end up at the end of that day basically flat. But looking at the chart, this finished the day. Didn't break above where I wanted it to, but it still felt like we were going to get some follow through with the way the market was reacting. So I hung on to it again. Then going to the daily, you can see we opened kind of flattish up, I believe, and then it moved down, and then it just started inching its way up throughout the day. As we look at the option prices, here's that option price. Well, they spiked way down at the open, so it put me down on it again, and then slowly started moving up. And then it just kind of zigzagged around here, and I wasn't gaining much more value, and I ended up selling them right in here somewhere because I didn't want to hold them over the long weekend with the holiday. Even though it was only Thursday, I didn't want to wait till Friday. So I did make a profit, but you can see how the VIX, as it continues to drop, you're fighting that price in those options the longer you hold on to those. My best opportunity was over here on that opening drive that I had. I could have got out right there at the top. Actually, I had my sell in and it didn't get picked up. And it didn't, even though we ended up quite a bit over here. I think we were up $40, $50 at the end of the day. Yet those options were barely by a couple bucks above where it was on that opening push after I bought. So let's show you here. I put the line in at the top of that day after that drive. Look, we barely got it, and that was after $40, $50 after just a couple days that it was up. So that's where that volatility, you're fighting volatility. As the volatility comes down in the market, you're losing value in your options even though you're climbing in price on the stock. You need big moves, and obviously the higher the stock price is going, it's taking the volatility out of that. So it's a constant fight trying to get out of those. I actually had stops in over here also on that second day, didn't get picked up. It would go right up to within pennies of mine and not pick it up. Same thing right here. I tried to get out right here, same thing. So this is a great example of how the volatility affects your option price over a couple of days. And you got to find, that's why, unless you're getting a clear move in these stocks, it's hard to hold them for multiple days, especially the way this market is. The day that hurt me was this day right here, the second day I held it. I needed that day to be like this day. This one needed to move up on that day, and that would have been a great move. And that's actually what I was looking for, was for this to make a run towards the 9-day and the 20-day and kind of retool itself or regroup. And there was some good resistance here. That's why I had the 2200s. I had resistance down here at 2193 sort of. But that would have got me to my 9-day moving average. And then this is the VWAP, your volume weighted average price. So when it was down below that, I figured it was going to kind of move back up towards it. And it did on yesterday. Struggled breaking through it in this area, and then when it finally did, it took off and broke through this lower resistance that I had. But it turned into a positive trade. Could have been a lot better. Just the time decay, volatility affected the price of those options, even though the stock price was moving up. So that's a great example for you guys in the future.